full of patients. Doctors don't have time to see you. While waiting for the doctor to see you, you may just burn, you may just, what do you call, blow out. That means you'll die. So, while there are policies that are there to cover for you for your illnesses, for example, for example, your kidney, you got 2 kidneys, you can still work with 1 kidney. If both your kidneys are impaired, what is the meaning of impaired? Totally damaged. Then your body cannot filter all your toxics. Your system becomes toxic and you will die. That's exactly what has happened to your famous actor Rajinikanth. I believe he's still surviving with 1 kidney. Lucky has got a compatible kidney. So in the event of all this, the company will pay you a lump sum so that you can do your treatment. Guys and girls and all those around, just think. The cost of medicine is going up. The medical attention is going up. Imagine you needed that money to do a repair to your body. You don't have that money. What will next will happen? You will be forced to sell a piece of your land. You'll be forced to borrow. You'll be forced to mortgage your house. So to avoid such predicaments, we need to prepare an umbrella before it rains. And that umbrella is insurance. You pay a small amount of money. In the event you having any of these illnesses, you are paid. And so your stress level comes down. Doctors have sold, lots of findings have come in. I have done my own research also. Many a time stress, your BP goes up because of stress, not because of your eating habits. Cancer comes because of stress. Because always we are complaining about things. Always we are thinking about what will be there tomorrow, what will happen today. All the stress will hit your cells and your cells will act in the wrong manner, and that's called cancer. So your insurance policies covers that. And today, the advancements of science, with advancements of technology, with advancements in medicine, insurance companies are able to provide you a card called the medical card. 30, 40 years ago, we didn't have a medical card because insurance companies were not ready. They were worried about heavy claims that will come in, whether they will be able to cope up with the heavy claims. If they can't cope up, then they have to declare bankrupt. But today, medical card has come to everyone. So your room and board is taken care. Your surgical fee is taken care. Payment is given pre-hospitalization and post-hospitalization. Now, what is pre? You're not well, you go to a GP, general practitioner, you ask, he gives you some medicine, you take it, still not well. Again, you go to him, then he says the 3rd time, I think you need to be admitted to hospital to do a full checkup. So whatever expenses that you have paid prior to admission to the hospital for the same problem, for the same sickness, can be claimed. And then once you're hospitalized, everything is done, you come back home, post-hospitalization is given for 60 days or 90 days, depending upon companies, contractual agreement. So you're taken care. So you need not take a rupee for your treatments most of the time, right? And then if you're a cancer patient, you need chemotherapy, and that can cause a bombshell. And according to your policy conditions, there will be a certain limitation that you can use for cancer as well as kidney dialysis. Because you're a diabetic, then you have to go for your dialysis often. That can cost a lot. If your diabetes reaches an alarming level, it can cost a lot. So this is a rough picture of insurance is all about. Now, let's see how as young people, you have to start thinking of your insurance. Now, what are the various financial objectives? Everybody has got financial objectives in your life, right? I want to be as rich as the owner of your college. I want to be as rich as Vijay, your actor. I want to be as rich as. So these are financial objectives, nothing wrong. So number one, a financial objective is your income protection. Whatever income you're earning, it needs to be protected. Number two, your family security. What is your family security? You look, what you call, you and every one of us get married, right? Everyone is get married. The Christians, when they get married in church, they promise in front of the priest that I, Martin, take you, Teresa, as my wedded wife. I'll be good to you in good times and bad. This is exactly what they say. That means I'll be good to you in good times. In bad times, I'll still be you because I'm a spouse. So that is called an agreement that you do. So in bad times, when your wife is suffering, are you there for them? Or in bad times when you are not around, you're out of the picture. Have you left your family in darkness? So what happened to your marriage vows? What happened to your promises? When the Hindus, we get married, we go around the fire clockwise. Why clockwise? Because the world revolves clockwise. I also revolve clockwise. I wouldn't be against anti-clockwise because I wouldn't want to go against the world. That's one of the meaning, good meaning. And when it says Agni Sachi, in front of the fire, I promise I'll be your devoted husband. But if you're not around, where does your devotion go? Is your love for your wife is only for a while? So that is called family security. Next is healthcare planning. That is your illnesses, your medical card comes under healthcare planning, which is very essential in modern times. Yes, we are young couple, we get married, we produce children. The child has got a future because the biggest gift you can give a child is a gift of knowledge, is through education. And so if you do not have a proper planning, you cannot see, you're unable to see your child becoming a better person in terms of getting certain degree because of lack of funds. Then we have, after that, we have investment and savings under insurance. So what are investment and savings? We will discuss about it. Then we have mortgages. That means everybody is buying a house. We have mortgages. And how to cancel, how to come out of your mortgage problem if you're not around. What will happen? How your property will be confiscated by the bank. You must understand, banks give you an umbrella when it's shining. Insurance give you an umbrella when it's raining. So which umbrella do you want to choose? During difficult times, banks are not going to be with you. They're going to come after you and claw back whatever they have given you as a loan together with the interest incurred. So you have to think about it. And of course, retirement. The young you, all of you are youngsters, young people vibrating. Your pulses are pulsating at a very hard, a very fast pace. But the young you will become the old you one day. One day, every one of us will have to get old. The question is, are we preparing for our old age right now? We take for granted another day for granted, but the day doesn't come. What are they going to do? So the old days, are we planning? So quickly, let me go through a little bit of income protection. Now, what is your financial commitment? If you are earning, if you have a family, you need to protect 70% of your annual gross income in order to maintain the current standard of living. Simple as that. Say, Mr. X is staying in Trichy town. He's got a double-story house, comfortable house. And according to his earnings, the lifestyle will go. What is lifestyle? Lifestyle always is proportional to the income that you earn. The way we live is called lifestyle. The things that we eat is also called lifestyle. The dress we use is called lifestyle. The car that we buy is lifestyle. The holidays that we go is lifestyle. So all these lifestyle are directly connected, are directly involved with your earnings. The question is, if you are around, yes, you can continuously give your family. But if you have died, can your family continue the same lifestyle as you have given? That's the question. In the absence of the breadwinner, that means in the absence of the husband, can the family continue? So what you have to do is, you need to protect. If you're earning 100,000 rupees a month, then 70% of it must be insured, because when you die, your personal expenses will die, but your family continue to eat. Their family need to continue to live under a roof. They got the expenses, so they need to live. So the simple calculation of protecting your income is 70% of your last drawn income multiplied by a factor of 10 years must be protected. Why 10 years? So that it is called the adjustment period. Now, Mr. X is getting 100,000, Selvam is getting 100,000 rupees. That means in a year, he'll be getting about 1.2 million rupees. This 1.2 million multiplied by the factor of 10 years is over 12 million. That's the amount he has to insure, so that when anything happens to him, he becomes disabled or he dies, right? This amount of money will be given to the widow, and she can put into a bank at 10% interest, and the family can continue the same lifestyle for the next 10 years. And within the next 10 years, a child who is 15 years old, in 10 years, he'll be 25 years old. She will start working, or he will start working. That's called the adjustment period. So the family is giving breathing time to survive. Otherwise, they have to depend upon relatives, friends, parents, and everything. Do you think it's the right thing? No. So insure against it. And what will happen? Why need to insure? Two things that will happen. Death will happen, or disability will happen. On such an occasion, no one will come to help you out. Your wife will have to depend on your husband. Now, young people, all of you think, why he's talking about a husband dying first. Case studies have shown, surveys have shown, statistics have shown. The mortality. What is mortality? Mortality means death rate. The male survives lesser than the female. Like in Asia, in Malaysia and all that, the average lifespan of a male is about 78 years. The average lifespan of a female is still 81, 82, because females are considered to be passive. Males are considered to be active. So that's the reason males leave early when compared to the females. That's why always you say, what happens when the husband dies? We don't say what happens when the wife dies. And in normal terms, the husband is a breadwinner of the family. So what happens if you stop having ability to learn? Leave alone death. What happens if you become disabled? There will be emotional distress in the family, worriness in the family. Number two, financial setback. What is the financial setback? Who is going to pay for the car loan? Who is going to pay for the credit cards? Who is going to pay for the housing loan? Who is going to pay for the 3 meals that you're eating every day? Despite extra meals, we go for a vada and a tosa in the afternoon. And who's going to pay for the future education? And when you think like that, it is total darkness that is appearing. So financial setback, lifestyle changes. When your father or mother, when both of them are earning, it's called dual wage earners. What happens is lifestyle increases. Hardly you cook at home. All the while you are going to the best restaurants in town. But when suddenly, unexpectedly, something happens, what happens? The family cannot afford to continuously eat outside. The family has to sell the car they had because they cannot maintain it because of one person's income as totally not in picture. Your lifestyle changes. Additional expenses will come. When a person dies, what happens? You have to employ lawyers to get back your estate. Estate is your houses. You have to have people, accountants or chartered accountants or who also to help out in getting out what are your retirement money. Whatever is with you, when you have to use legal people, you have to employ money. So litigation expenses will come and unsettled debts, all your loans that have taken. So ladies and gentlemen, think of this. So your commitment to your loved ones, protect your greatest asset. I'm not able to interact, but just I'm asking myself, is your property an asset? Is your house an asset? Which is the asset? You are the asset. You and I who are working are the greatest asset. We are responsible to buy the house. We are responsible to buy the car. We are responsible to create a big estate of so many crores around. And when you die, everything dies with you. So a car can be replaced. A car is totally damaged, it can be replaced. A house is totally burned, it can be replaced. But if you are totally burned, question is, can you be replaced? So who is the greatest asset? You are the greatest asset. So what is the asset that we need to be insured? The amount that you earn need to be insured. That's it. Simple as that. There's no algebra. A plus B the whole square is equal to A square plus 2AB plus B square. Nothing of that sort. A simple formula. Your income need to be insured. Next to your income comes your healthcare plan. Very well said. When wealth is lost, nothing is lost because you can always replace it back. When health is lost, something is lost. When character is lost, everything is lost. So number two, when wealth is lost, the moment you have got diabetes mellitus, whatever what do you call traditional medicine, anything that you take, you can only contain it. You cannot eradicate it. That means you cannot get rid of diabetes. You have to live with it. The consequence of which, if you're wounded deeply, what happens? A gangrene is formed. And sometimes an amputation follows suit. So health is the most important thing in your life. Stroke, 1 in 20 are at risk. Cancer, 1 in 8 will develop cancer in all time. Heart attack, 1 in 4 will develop heart attack disease in the lifetime. 1 in 2 heart attack victims are under the age of 65. Each of us are at risk of getting these illnesses because of our lifestyle, the way we eat, the way we behave with very little exercises. What will happen? Your body will repel and gives problems. You meet an accident or you have a shoulder need to be replaced. Look at the cost. Gastric bypass, coronary artery bypass, heart valve replacement, arthroscopy, joint repair. All this will cost money. Are you prepared to bring out your own money? So who is going to pay the huge medical hospital bills? Today, lots of private hospitals give you the best of services. Yes, with the best of services comes the best of money. No. I don't want this private hospital. I'll go to government hospitals. But the queue there is long. Do you have the tenacity to wait for such a long period? It's congested. It's dirty. So why, when you can have the pleasure of buying a small medical card with a small premium and enjoy the good facility, why deprive of it? If you can't afford to buy a medical card, that's a different question. But in every part of your earning, there's a disposable income. What is disposable income? There's extra money that you can save. So that's called you buying a medical card. Bear the risk of medical inflation. Medical inflation is going rock high, about 15% per year. Add burden to yourself and family. Especially when the wife is sick and she got a medical card. You have to take her to the hospital. You have to bring her. She can't do regular duties as a housewife. You have to find extra people to work in. Everything is cost. Remember this, young people of this college. Money is not everything, but everything is money. Money is not everything, but everything is money. To move from point A to point B, if I were to fly to Chennai, I need money. If I need a taxi to the hotel, I need money. If I stay in the hotel, I need money. You need to eat in the hotel, I need money. So money is not everything, but everything is money. But I'm not telling that you should be greedy after it, but you must have enough to carry our life. And it starts with all of you in college right now. It does not start when you get married. It does not start when you're having children. It starts right now. Because tomorrow begins right now. So you need to think about it. So your commitment to buy a medical plan that takes care of your hospital needs, buy a plan that can take care of your critical illnesses need. That means your illnesses that are quite serious. Second part, education. Today, People have, parents have literally become bankrupt educating their children, thinking that one day the young child will become an adult. And when he studies and he completes, he'll come back and take care of them. Many parents are totally disappointed because whatever money they had for their children, the children has, of course, they have graduated very well. Engineering in information technology. But the parents are left alone. That's why you can see lots of houses there where old folks' homes are being created. It's a sad thing. Never mind. Let's continue about our education. So education is the gift that you can give. Now, all of us can Google, all of us, all of you are bright young kids. To raise a child, right, you need about $245,000 cash for healthcare, for clothing, to house them, childcare, food, transportation, and miscellaneous. And this child, once he's growing up, needs an education plan. Yes, if the father is alive, some or other, he will manage. What if he's not able to? And how many of us around, I want to ask around, how many of us around diligently, right? I can't ask you because you are students. In Tamil, they say, Varavillama selavu sellum kalam. Because your father earns and you spend, right? So how many of people who are earning out there, when they earn, immediately they save? No. So the element of saving is not there. And if you do not regularly save, then where is the money that's going to be there for the future? How many of us are guaranteed of scholarships? Parents end up mortgaging their property to get a loan for you to complete your college. So if every parent can think diligently that tomorrow begins today, then they start planning for the studies of the children. But if the child, so bright, cannot get into the respective course he or she wants, the postpone of studies takes place. There's already stuff started and already challenging life. And many children are forced to start working early because they didn't have the facilities to continue the studies. A child is denied the opportunity to maximize his or her potential. So a child education plan can come in through life insurance. So a child education plan guarantees you a certain amount of money, guarantees you protection. Now, you may look into, why can't my father invest in unit trust or mutual funds and everything? Yes, you can do. But unit trust and mutual funds will not give you the guaranteed amount if something happens, because they are not involved in the element of insurance. Only an insurance company, if you are not able to continue because of death or disability, the promised amount will reach the child at a particular date. That is the guarantee. So you can't compare literally unit trust or a mutual fund or other investment on par with insurance, because insurance always carry the element of protection. If something happens, we will still abide by the amount that you require. How does insurance comes in housing loan? They say, my former prime minister said, a house is a basic need for every individual. Therefore, nobody else shall own it. That means every single of you must have a house. That is his dream. That's why Malaysia enjoys one of the best housing scheme in the world. Yes, you buy a house. How many of us can buy a house with a cash? So normally what we do, we take a mortgage. That means your house is mortgaged to the bank and you take the loan. Now the question is, how are you going to pay back the loan? Normally say, Sangeeta, I see her raising her hand. Sangeeta buys a property. Say the property is say 5 lakhs or 10 lakhs, whatever it is. She pays a down payment and the balance is a loan. And there's a loan term. What is the loan term? The loan term is say 30 years. That's called the repayment period. So you pay X amount of rupees every month from the time the loan is released. And what will happen? You're paying diligently. And suddenly, for some reason, a certain virus has attacked you and you are unable to perform your duties. So you can't work. Every time you're in and out of hospital. Now, question, who will pay the mortgage? Who will pay the outstanding mortgage? Are you still going to depend upon your parents who have already sacrificed their life for you? Is it rightful for us to do so? No. So what happens is, if you have a mortgage plan, what is a mortgage plan? If you are taking, say, a loan of 10 lakhs, you buy an insurance policy for 10 lakhs. That's it. Always remember, in insurance, you only pay 2%, 3% of the sum assured. That means 10 lakhs multiplied by 3% will be the payment. We call it premium. And you keep paying. If death were to occur, if your health has to be destroyed, or you become disabled, the insurance company will pay the outstanding loan to the bank, and the bank will release the home to you, and the mortgage will be cancelled. That's the beauty of how you do a housing loan guarantee insurance scheme. So through insurance, the insurance company will pay. The owner of the house is not you, because all your respective rights belong to the bank till you repay. Your name will be there, right? You have charged it to the bank. The chargee is responsible for the house. And if you don't pay, they can auction the house. So this is how a housing loan comes in and insurance comes in. How? As I said before, the young you becomes the old you. Are you going to retire in comfort, or are you going to retire from comfort? The two words, in comfort, from comfort. If you have planned diligently, right plan from the college time, when you start going to work, a little by little you have saved. That will become a big amount later on. That's called the magic of compound interest. What is the magic of compound interest? Anything that you do diligently, that means every month when you get your pay, say, you keep a date, every month on the 10th, I will deposit 50,000 rupees into the bank, regardless of whatever rate of return your bank is going to give you. Regardless. What will happen? The magic compound multiple factor will come in. It will keep on building. And all of a sudden, you can see you have a big lump sum. So we need to prepare for your retirement, because it is there you're going to be. Your children are not going to be with you. The young Malakuri and all the young people here, right? You become old, your children would not be around you because they got their life to take care. So we cannot be dependent. We need to be independent all the time. And that is the aspect of every individual we should follow. But sometimes as I travel to India, I travel quite often there. The dependency is still there. Something is wrong, go to the father. Something wrong, go to the father. Come to the family. The family has been butchered left, right, center. Why? We do not follow a particular process of independency. That I will stand on my own legs, I will not depend on any others, because everybody has got. We feel that our parents owe you something. We see trees everywhere. Trees provide us shade. Trees provided fruits, right? And the tree provides us wood. Did any time the tree ask, you owe me a lot, repay me to me? No. So why do we ask our parents that they should repay you or take care of you? We should take care of our parents. So this is called your retirement. So when do you want to retire? It's your decision. See, in today's world, evolution has taken place. We have moved from the agricultural. Our early phase of evolution was farming. Our forefathers were agriculturists because for them is roti, kapda or makan. That's it. They only need food, shelter. So they need food, they became agriculturists. So as revolution came in, we moved into industrial revolution. When you move into industrial revolution, a lot of changes took place. Then from industrial revolution, we move into technology revolution. And from there, we have moved on into digital revolution. Now, I want you to pay a little bit of attention. What does this revolution and evolution has given us? Very simple. People are no more loyal to their jobs. The Z generation, the millennial are more or less the same. For them is there's no loyalty. I wouldn't want to work for one particular company for 10 years, 20 years. I want to change. I want to be a free bird. I wouldn't want to be ordered. I want to be listened. I must give it. I must give it. Someone, can you unmute? Mute, please. Okay, thank you. So you decide. Mark Zuckerberg is no. Do you know what age he retired? You all can Google and find out. By the age of 40, he's helping his wife do cooking. Why must retire at 60? Why must retire at 70? Your choice. It's a digital world. Things have changed. People are becoming multimillionaires by the age of 30. So you choose. But then when you want to retire, that is, first, before retirement is called man at work. After retirement is called money at work. What is money at work? As Robert Kiyosaki says, money at work means whatever you have invested, the investment must come back to you as a form of passive income. You will not be active. And that's how we have to work. While you are young, you are energetic, you're full of, the adrenaline is fully, is in full flow. What will happen? Work hard. Sacrifice your comfort for a short while. Many youngsters, they make these mistakes. When they see some money, they want luxury. Your luxury can wait. Wait for a while. Build up your assets. Build up your assets. Then your assets will start giving you return. You can enjoy. So what are your retirement goals? You have to plan right now. What are your retirement goals? Where do you want to retire? Do you want to retire in Switzerland? Yes, you can. Do you want to retire in Canada? Yes, you can. It's all money. You have that money, they'll give you a permanent residence, right? So what type of retirement you need? What type of lifestyle do you want? Then how do you plan for your retirement and why is this important? So what are the things you look for in retirement? Cash. Daily and normal expenses. You're no more working. So what is your daily expenses and your normal expenses? Your household expenses. Contingency expenses. That means something happens. You need to, your house need a repair. You need to go for, you need to something, emergency has come. You must have emergency funds with you. And of course, leisure and extra money to do what you like. Travel the world. I like what CNN says those days. I do not know. These days they say or not. A man who has traveled the world has far more knowledge than the man who has read the most number of books. That's the power of traveling. Travel the world. Look at where how people behave, what people do. What's our people's attitude towards life? Then you have the money. Of course, when you are growing, one of the most important elements we have to look into is our health, because our health is always a standard health. By eating all the tanga paspam, everything, you cannot be super standard, there's nothing, that's rubbish. Your health is only standard, but it can deteriorate, it can come down. As you age, the aging process comes in with a little bit of problems. How do you tackle it? So your medical care, right? Are you involved in, you want to have your own gym in your house? Yes, why not? Everything is possible, right? And the type of food that you eat, you cannot be eating heavy food as you age. You need to eat a food with a balanced diet, because sometimes your system cannot digest. Are you taking more protein out there? Are you taking more of carbohydrate? All this. And your home, where do you want to stay? What is a home? A home is a place where there's no encumbrances. There's no financial commitment. It's all fully paid because of your good financial planning. Through life insurance too, you can do that, right? And your investment returns, as I told you, expand, maintain your capital. That's called capital conservation. What is capital conservation? You have, say, 20 crores of rupees. If you keep on spending it, it'll go off. But on the 20 crore rupees you only spend on the dividends supplied by the that capital investment, then your investment will lie long and you have lots of money for your old age. So your expenses should not exceed your income. If you're earning, say, 100,000 rupees a month, if you're spending 80,000 rupees a month and saving 20,000 rupees a month, you got financial independence. But you're earning 100,000 rupees a month, you're spending 120,000 rupees a month, you are in financial disaster. But you're earning 100,000 a month and you're spending 100,000, you will never have financial independence. And that's the power of saving, right? So you have to plan for your retirement. At what age do you want to retire? What is the life expectancy? As I said, male, we live to about 79, 78, right? So you have to, and what are the sources of income? That means if I had an insurance plan, and the insurance plan's got maturity, if you're still alive, the insurance plan gives you, LIC gives you very good maturity plans. Put some money into it. Your house is fully paid. You have bought properties. People are renting it. You have got lands. People are what do you call from whatever the output from the land you're enjoying. All these are going to be a passive income. What rate of growth can you expect from your savings now and during time? So you have to establish right now. Rome was not built in a day. Step by step. That's why they say when what do you call, tiny streams form rivers and mighty rivers form the ocean. So you have to start somewhere out there and do whatever you can. The next part is your investment. In finance, the purchase of a financial product or other value of with the expectation of favorable returns, you need to start investing. How little you have to start investing. And insurance is one of the ways of investment. I'm not telling the way. Please don't make me wrong. Dollar to dollar, any investment arm can challenge insurance. But the beauty in insurance is that your investment is protected against death and disability. So invest wisely. The investment of money or capital in order to gain profitable returns as interest, income, and appreciation in value. So invest yourself. Important factors to consider before investing. What is the rate of return? Is there a risk? Don't go into get rich schemes that are available throughout the world. I'm not here to talk about your cryptocurrency or bitcoins. So just be careful in whatever you do. And whatever time you have, your investment must have a time period for it to reach the best of the best. All right? And how much of capital? While you could be in various what do you call, in your college, you will be doing various classes. Some will be in BCom, some will be in economics, some will be history, some will be in what do you call, social sciences and everything. Regardless of whatever you are, you need to spend some time looking into how you can grow financially well. How you can grow financially well. Let me tell you a simple story. My father migrated. My father belonged to a little town called Jayagonda Cholapuram in India. This has happened about close to 90 years ago. More than 90 years ago. So when people are migrating, because at that time Malaya wanted to develop its rubber estates. He didn't have labor. So he started importing labor from India, especially from the south, because easier to come from the south. So my father was one of the migrants who came in and he worked for the government. He raised 5 children. I learned financial planning from my father. He was getting about 300 ringgit Malaysian at that time as a salary. You multiply by the Indian factor, you know how much is it. It's about 1 to 18, I think, 1 to 18, 20. But he's unable to educate all of us. So that old man, what he thought, apart from his working hours for the government, he raised cows. He built a big hut whereby he had about 6 to 7 cows. He used to milk the cows in the morning and milk the cows in the afternoon, give it to a vendor. The vendor will give that money. Through that, he was able to send me to India to study in Loyola College, Chennai. And that's called financial planning. He didn't go to any college to do all that. He knows that he needs the extra capital in order to supply to the children who need to continue to study. So that is the importance of knowledge. Get to know every aspect of financial planning, every aspect of insurance, and start moving into it. So practically, this is the lifestyle that we follow. If you look down, all of you are young and single. And all of you got no worries right now. Your only worries is how to pass your exam. Don't cut classes. Cut your leisure time. Right? How to pass your exams. The moment when you pass your exam, right? What happens is, from your mother's womb till now, you're dependent. You're dependent on your parents for every single move because his money is involved. So you come over. So when once you start working, you're young and single, start an insurance plan. Now, many young people ask me also, Mr. Sami, why do you need an insurance plan? I'm young, I'm energetic, I got many more years to live. Why I need to buy an insurance plan? I said, from 0 till now, because the Chinese says you're 1 year old when you're in the mother's womb. So from 0 to now, are you independent or dependent? So what is the meaning of it? Can you function on your own without the help of your parents? No. So you're dependent. Now, when you started to work, are you going to be dependent or independent? Sir, I'm going to be independent, sir. Now, if you're going to be independent and you are struck by a disease, leave alone death, and you cannot work for the rest of your life, what will the cycle always do? Go back to your parents. But if you have got a little life insurance policy, that will take care so that you not be killing your parents in financial aspect. That's why you need a life insurance policy. But sometimes I tell very subtly. As you look, if you have seen my slide on child education, an average parent spends about $285,000 on their child till he's an adult. Say you meet in an accident and you have died. Of course, your loss can never be replaced. Your love can never be replaced. But something can be replaced. The cost of your parents raising you through all difficulties of their life to be a graduate from a recognized college. Who's going to pay them? I ask each and every one of you this question. Who is going to pay them? They are not depending on it. They have lost the son. But they have lost the love. But they have put so much of effort, which cannot be quantified, which cannot be calculated. So much of money they spend on you. So by buying an educate policy, when you start working, at least from that policy, they see you. They see you still alive. That's called young and single. Of course, as the life process, right? As you go up, then you need to live within your means. You have to cut your clothes according to your body size. Don't compare with other people. You can compete, but don't compare. Everybody is a separate entity. A guy having a Mercedes-Benz need to go to Vellore, can go to Vellore. A guy having a Honda also can go to Vellore. Both the cars will take to Vellore. It's only affordability. So live within your means. So when you get married, you have someone to support. You have someone who have trusted her life and coming to you. You need to take care. So you need to increase your insurances. Where you need to increase, you have to increase according to your earnings. Your earnings is so much, multiply by 12, multiply by a factor of 10. That is called a human life value. Do that first before you can even buy your next Rolex watch or next, what do you call, Ferrari, if you want to do so. That's important. So increase in savings. And insurance is a disciplined way of saving. Let me ask you a question. Has any manager in any bank, State Bank of India, or what do you call, any other bank, any bank there, right? Reserve Bank, any bank, you name it, have come and told you, hey, this month you're supposed to deposit 10,000 rupees, you did not deposit. No. You go to a bank manager, sir, I want to have 10 lakhs in 10 years, sir. Every year I will put in 1 lakh. And then in 10 years, I'll have 10 lakhs. Isn't it, sir? Yeah, yes, definitely. Together with the interest that incurred. Yes. Thank you, sir. So I think every year around June, I'll put 1 lakh, sir. So first year you put, second year you put, and third year you go to the bank manager and say, manager, I put 3 lakhs into the bank. But if anything happens to me, can your bank pay my family the 10 lakhs that I wanted? The bank manager will be laughing at you. Hey, pagal ho. You are a nut la. How can the bank give you, right, 10 lakhs when you only deposit 3 lakhs? We'll give you 3 lakhs together with the accrued interest. But then your life insurance company can give you the 10 lakhs, even though you have paid 3 lakhs. That's the beauty of life insurance and banks. You need to understand that. So increase your savings. Of course, in every country, when you buy an insurance policy, there's an element of tax deduction. Now, why does the government gives also? The government wants to encourage people to buy insurance because the government does not want people to depend on it for future support. Because at the end of the day, the government directly or indirectly become responsible for orphans. Orphans is people who are not do not have parents. So move from there. Then you are married with kids or mid-career, increase your coverage, increase your savings, plan for your pre-retirement. This is called your life cycle. So where does it start? It starts right now. Even as a student of a college, you're giving classes, you are doing some tuitions and everything you're earning. Start the element of savings. You can start the element of having a life insurance with you. And why? And after 43 years, I'm still, though I'm a manager, I got a team of people working with me, right? I do financial advices for lots of people around. I give lectures all over the world, not for anything. I love what Zig Ziglar said. If you can help enough people get what they want, you get anything and everything that you want. If you can help people get what they want, you can get anything and everything that you want. Allow me to translate in Tamil because I love this. மக்களுக்கு என்ன தேவை என்பதை நீ பூர்த்தி செய்தால் உன்னோட தேவைகள் தானாக இயற்கையாக உனக்கு வந்து சேரும். அவ்வளவுதான். That's it. So look at people what they can do. So that's what I'm doing right now. On a Saturday, normally I'm with the family. Normally Saturday is my golf day. When Malar Kodi called me and everything was arranged and everything, it's a pleasure talking to people. It's pleasure touching people. So if I can build people, that's my goal. So that is what keeps me in this business, passion. Why? Because almost every month, through me, my company is paying close to about 100 or 1,000 Malaysian ringgit in terms of claims, hospital claims, retirement claims, disability claims, illnesses claims, policy maturity claims. So I'm happy because if not for me, these families will not get 1 paise extra. It's because of S.K. Sami who has done some financial planning, insurance planning 10 years ago, 15 years ago, 20 years ago, 25 years ago, 30 years ago, 40 years ago. What have been done today is come into reality. I see people being happy. I just paid a claim last week to one of my golf friends who died of tongue cancer. We go for golf together. And this criminal disease has come into him about 1.5 years ago. Chemo was done, paid by medical card. Everything was done. But a day will come, a day have to go. From dust to come to dust we go. Though I lost my friend, I was able to pay a check to the family through life insurance. So I see life insurance work. Life insurance is a miracle. It works. So part of our life insurance process also, we have nominees. This is also, we educate our people. What is nominee? Waris. Because if you do not have a nominee, it goes interstate. If you have a nominee, it's called testate. If you have a nominee, then you have to apply for a letter of probate. If you don't have a nominee, you have to apply for a letter of administration where lots of questions are asked. So very key question, your property cannot be dispersed to anybody if you don't have a will or you don't have a nominee in the terms of financial agreements. So insurance also teaches all of us, I can't go deeply into that, it's a very big subject, importance of nomination, importance of a will writing. So ladies and gentlemen, quickly, the subject is how the business is growing. In the 70s, anyone can sell insurance. In the 80s, the graduates are coming in. In the 90s, they are trying to be professional. So the whole industry, as I told you, let it be in Philippines, Hong Kong, Singapore, Taiwan, Vietnam, Sri Lanka, India, everywhere, things are changing. These are the people who are selling you insurance and financial papers. Because insurance companies are also selling now financial investment products. So those days, there's only agent. Today, we have tied agent. From the tied agent, we become advisors. I'm an advisor. What I need to do for an advisor, I need to go for financial planning course in order to advise. I advise on investment. I advise on estate planning. I advise on cash flow management. I advise on debt management. I advise on mortgage management. So that is called financial advisor. Then all of a sudden, banks are coming in to sell insurance. Why? If you look into India, India has got a population of 1.4 billion. Less than 25% of its population has got insurance. And the penetration rate is only 4%. And imagine if all these people already, they are suffering. Already they are suffering because of lack of finance. What will happen if any one of them has to just go off, die? Will the situation be better or worse? The answer lies with you. So banks have come into the bandwagon to sell insurance because the harvest is plenty, the laborers are few. Arvadayo adhigam vere atkalo sorpam. So this is where competition comes in and everything. There are stockbrokers, and now in modern times, I think in India also they have started. In Malaysia, this is a very big market called the takaful market. The takaful market is selling life insurance through the Islamic way, through the Mohammedan way of distribution, or the Farite way, they call it. So this is the changes that have taken place. Increased regulation. Government is paying more attention. All insurance agents, we must do continuous professional development because we must give the best advice to our customers. It is not, hey, my name is Billah, you buy some policy from me, that's it. No more emotional selling. Logical selling comes in. And we are closely supervised by the authorities. That means gone are the days where people can tend to cheat. In Malaysia, if you are found to have a wrong advice, if a complaint goes to the Reserve Bank of Malaysia, you are called in for an interview within 14 days, and you are not able to explain that you did the wrong thing, you are expelled or you are jailed with a $1 million fine. So the industry is not what you all are thinking. If I got no other job, I become an insurance agent. Gone are the days. The mindset is changing. The paradigm at which people looking at are changing. Our customers are being aware. Today, digital world, with the press of the simple button, you go to the Gokul or the Google, they call it. You can find various products in various companies. Only that you want to buy online, you can, but you need an agent. You get him to explain. So discerning customers know about life insurance. So the awareness is getting higher and higher and higher. That's why one of the richest company in India is Life Insurance Corporation of India. Billions of rupees are lying there. So these are the areas of development, and they say that trust me. Those days, customers say you have to tell the customer, trust me, tell me, and show me. But today, customers are looking at people who are professional. The way we carry ourselves, the way we choose our products. We don't sell products, we sell needs. What are the needs of Mr. X? What are the needs of Mr. Y? And then we place it with a solution through our products. So the whole world is moving. Remember, all young people out there, if an airline is going to take off, it cannot take off without insurance. Because if the airline is destroyed, people are killed, they are not going to give money from their pockets. Insurance companies pay from their pockets. All disasters, insurance companies pay. A vehicle cannot move without insurance in my country. I wouldn't know about India. He has to buy an insurance policy for the motor vehicle, then only he can take the road tax, then only he can be on road. But if they find a car on the road without a road tax, that means you don't have insurance, the car is suspended. So every element on this world depends on insurance. What about top players? What about top Hollywood actors and actors? They insure their body, they insure their teeth, they insure their hand. Every component got lost, millions of dollars are being paid. Who pays? Insurance company. When you travel, you got travel insurance. Your flight is delayed for more than six hours. You can find a hotel to stay. Insurance companies will pay. Your baggage is damaged. Insurance companies will pay. Your baggage is lost. Insurance companies will pay. So in every single part, to reduce your risk, to reduce your individual risk, insurance will pay. So go forth and tell people, from your savings, put a small amount for insurance. From your spending, put a small amount for insurance. When Diwali comes, when the marriage comes, we spend a lot of money not required, because what goes out would not come back again. But still we spend. Luxury. So from your luxury budget, put a small amount for insurance. And from your investment, you're investing in various elements, put a small amount in insurance. And that will give you a total protection. You will never fail. In my 43 years, I have never seen anybody say, I became poor because I bought life insurance. Many people became poor because they didn't think of life insurance itself. It's such a noble product ever to be conceived and sold by the human society. The uniqueness of it. So, to summarize the entire proceeds, when you buy a mortgage, when you buy a house, you need insurance. When you meet an accident, you need to go to hospital, you need insurance. To protect your income, you need insurance. To protect your illnesses, you need insurance. So life insurance is the pillar that gives you that provision. It will be ready when you need it most. It will be sleeping. It will be sleeping in a bag with LIC. That is called the risk. You pass the risk to LIC, it will be sleeping. Nothing seems to move. Hey, every time I'm paying for the insurance policy, what's happened? And all of a sudden, you're admitted, the bag is open. The Pandora box is open and given. You die, the box is open to the widow. And in my 43 years of experience of giving claims, I'm yet to see a widow who comes to the claim department or through when we give them the check that, my husband has bought plenty of insurance. No widow has said. Many of them said, my husband has not bought enough insurance. Not because she's greedy for money, because only a widow will know the financial impact of the family in the absence of the breadwinner. Simple as that. Only you should know. Now, her responsibility is on her shoulders. Previously, the responsibility was shared between the husband and the wife. The husband is gone, and the poor woman has to bear the entire burden. The financial impact has put on her shoulders And she says that, well, thanks, my husband has bought enough. And you ask her, many a times a widow said, the husband has did not leave enough for her to survive through the grueling times, the difficult periods that comes. So it provides funds for savings, yes. It provides funds for retirement, and it provides for estate planning. Estate planning is you creating more and more properties. So look at how beautiful insurance can combine in every aspects of your life planning. So, ladies and gentlemen, you work hard for your money. Does your money work hard for you? You work hard for your money. Does your money work hard for you? Take this question along when you go back. Insurance is not because somebody must die, but somebody must continue living. The husband dies, imagine the wife and the children all go and kill themselves? No. Insurance is not because somebody must die, but it's because somebody must live. Will you enjoy a retirement or retire from your enjoyment? If you have no money, you have to still work. You have to find some odd jobs and still work. There'll be a tomorrow, but will your tomorrow come? How certain that the tomorrow will come? How certain is tomorrow will come? Money is easy to earn, but hard to keep. Insurance is a disciplined way of earning money. So, ladies and gentlemen, we have 4 competitors in our world: death, old age, disability, and critical illnesses. You and I cannot run away from it. These are our competitors. That means for life insurance people, these are our competitors: death, old age, disability, critical illnesses, right? So what does insurance do? Our mission is for every LIC agent out there, for every insurance advisor from Malaysia, for every person in this global world who are doing life insurance. Our mission is to get to our people like you, before these 4 competitors can come in: death, old age, disability, and critical illnesses. So these are problems. Insurance has got solutions. What are the solutions? Insurance is aspiration. It gives you the guarantee for the future. Insurance is dignity, whereby the widow need not depend upon the brothers, sisters, parents, anything for their survival. They stand on their own feet, and that's called dignity. I live the life my way without depending on anybody. Insurance is the best ever letter ever to be returned, because when a breadwinner dies, the money is put into the bank, and every month when the check comes to the wife, that is called the love letter the wife receives from the husband who's no more. So insurance is the best ever love letter to be returned to be given by the breadwinner in his absence. Insurance is fulfilling dreams. Imagine how many houses would have been confiscated because they didn't pay the mortgage, but through life insurance, they are able to pay the mortgage. The house belongs to them. How many children were able to continue to study because the father had a fantastic plan through insurance for education. Imagine the wife has to go for a bypass and a kidney operation, but all expenses are paid by the insurance company because of the husband's prudent thinking that life insurance will be needed, medical insurance will be needed one day. All this takes place. Life insurance is lifestyle. You need not reduce your lifestyle. Life insurance will sustain your current lifestyle because enough money is there. Life insurance would not necessarily make you rich, but it helps you to sustain your current lifestyle. Life insurance is a promise, because that's why you said it's a guaranteed sum. If you're taking 10 lakhs, the 10 lakhs is guaranteed by the life insurance company on the event of death, disability, or sicknesses. And insurance is money. Insurance is hope. Because behind the darkest clouds, it gives you a silver lining. It gives you a light where each and every one has got hope so that the future would not be dark. Otherwise, the future will be the dark. And insurance is nothing but peace of mind. Insurance is nothing but peace of mind. If I've taken care of all my liabilities, what is my liability? My credit card owings, my bank owings, my mortgage owing, the amount of money I need to give my wife every month so that the family will have enough khana to eat. The roof is protected, everything. So every of my liability, that means everything I owe to the banks or anything. If I've taken an enough insurance policy together with my income protection, my family can live in peace. They will miss me, but my love will continue through life insurance. My love will continue. So, ladies and gentlemen, in 43 years in this business, I truly believe in the life insurance because it's a vehicle that can safeguard you from point A to point B. So it's a great pleasure talking to each and every one of you, to all you young people out there, right? Always do your best, be your best. Inspire others, keep inspiring yourself, and be the best all the time. Because in life, there's no such thing as impossible. When you look at that word impossible, you break into 3 syllables. It says that I am possible. So each and every one of you are born to win. You are going to be a winner. You are going to be a person of different kind. And when you grow, help others to grow along with you. With that, I'd like to thank the main person who connected with me, Malar Kodi, and everyone from Sri Vasavi College for giving me this opportunity to talk to you. Hopefully, if God's wishes are there, we'll meet someday out there. If you have any questions, I'm open to the questions. I leave it to the organizers. Any questions? Everybody is quiet.
Good morning, sir.
Yes, Dharani.
I'm first year student now.
Yeah.
In which scheme of insurance suitable with me?
In which scheme?
Which scheme?
It depends upon if you're a first year student, you can move into a health plan first.
Okay.
Take a medical policy for yourself. It won't cost that much. Start that first. And once you start working, then you take an insurance policy on your life against the amount of money that you're earning. That is protection of income. Start with these 2 first. But a medical card is very, very important for you right now.
Okay. Thank you, sir.
Any other questions?
Good morning, sir.
Good morning.
I'm proud to talk to you, sir. I just want to know what is unit link insurance plan? Why it is considered the risk one compared to another policy?
Okay, as I said, the world is moving. Evolution is taking place in all aspects of life. So what has happened is many years ago, in not only in Asia, in the US, in the Western world, they were using traditional products. What is a traditional product? A traditional product is, say, they give you a 1 lakh sum assured. They say we'll guarantee you so much of bonus, and then companies are unable to continue the bonus because of the investment scenario around. You see, investment scenario is when there's a higher demand and lesser supply, the cost will go up. But there's more, supply is more, the demand is less, the cost will come down. Similarly, on interest rates, the market has become volatile. So interest rate starts falling. Now, what will happen is your insurance company, when you pay X amount of rupees, they will take that money they'll keep a certain element for insurance charges. There are two elements in your insurance policy. One element is insurance charges. The other element is expenses. Expenses is paying commission to agents and everything. And the third element is investment. So they have to invest somewhere to give you a return. So if LIC is investing at about, say, 8% or 9% rate of return, how are they going to give you 12% rate of return as promised? Because the earlier policies, they give you a promise, will give you so much of bonus. So what will happen is the morale of the people will be low, and things will not go. People will shout at the company. So slowly, the actuaries, who are the actuaries? These are the people who compute your premium. Have found out that one way of getting out of is passing the responsibility to the insurance people, to the insured. That's called your TULIP policy or investment linked policy. So investment linked policy will give you returns according to the market conditions. So you are responsible. You can use the portfolio. You want to put in bonds, you want to put in what you call equity. It's left to the policyholder. Of course, the policyholder, the insurance agent need to consult with the policyholder to change your portfolio at time and come. So what happens is the responsibility is slowly passed to the consumer. Insurance companies do not want to take the responsibility of investing because the investment market is very, very volatile, very, very unpredictable. Right now, the war with Ukraine and Russia has elevated price levels so high, and the purchase of things are getting high. And how will the investment scenario will be worse? People don't want to invest; they want to be cautious. So all these plus and plus, finally, most of the insurance company have come into insurance-linked policies, whereby there's an element of insurance inside and the element of investment inside. The investment is directly proportional to the profit the company makes from year to year. That's a different, Darshini.
Thank you, sir. I have one more question to you.
So there's nothing wrong in buying a TULIP policy or investment link policy. But the most important is customers must monitor every quarter. How are my dividends coming from a TULIP policy? All right. What shall I do in order to make it better? Sometimes you have to subscribe a little bit more to make your portfolio better. So nobody can say that it's not a good plan. It's a right plan. Company cannot continually give the old-fashioned bonuses. They will go bankrupt.
Yeah, thank you, sir.
Welcome. Any other questions? I see 79 people there.
Sir, good morning, sir.
Yes, go in the Raj.
Sir, I have a question, sir.
Yes, please.
Can I enjoy tax benefits through my life insurance, sir?
Yes, every industry there's a tax benefit. You look, you ask your agent, or you check with the respective life insurance company, or go into what do you call the IRDA, insurance relief for insurance policies. They have a capping.
Your
Yep.
microphone's on.
Yes, go ahead, Govindraj.
So that's a question, sir.
Yeah, in any country they do give, right? They do give relief for your policies, yeah. But they have a capping, huh? They don't give. Maybe if you have bought lots of policies, not the entire premium is subject to relief. They have a capping. Like in my country, they have a capping of 9,000 Malaysian ringgit as a maximum relief you can get for insurance payment. Come, young people, ask questions. Everybody is quiet. Either the speaker is useless.
So I have one more question, sir.
Okay, Darshini. What
So
class? Yeah.
So what is no claim bonus, sir? why it is considered the benefit one? How it is possible? Because everybody know bonus it is one of the benefit factor of insurance, right?
Oh, you're relating it to the vehicle insurance, ma?
Yeah, sir.
No claim bonus means if a vehicle has, now I buy a vehicle insurance, that's called automobile insurance. And if I've not made a claim for 1 year, then the subsequent year I'm given, I wouldn't know the prevailing rates in India. Now I'm given a discount of 25% once I renew my vehicle insurance with the same insurer. That's because because you kept your vehicle away from this, the company gives you as an incentive. Otherwise, your vehicle insurance claim can be very high. So your claim bonus will go up every year to a maximum of 55%, I think. So that the moment you don't make a claim, you get your bonus. And this happens in medical card. In some companies, don't generalize it. In some companies, if after buying that policy, you don't make any claim in the first 3 years medical, your hospital and your hospital room and board will increase by 10%. That means I have $2,000, 2,000 rupees room and board. The next time I have 2,100 as room and board, given extra, ex gratia they call it, because of your non-claim. So that brings about profit to the company. Am I clear, Darshini?
Yeah, sir. Thank you.
Welcome. Any others? I thought young people are so aggressive. You ask a lot of questions, I'll be caught. Is it a holiday in your place right now? This is in Coimbatore, right?
Yes, sir. It's holiday.
All right.
Can a student listen? Any feedback, please tell to him.
Don't feel shy asking, because we learn from each other, right? I learn from young people like Malar Kodi, right? How the current trend is. So we share experience. Life is always sharing experience. So don't feel shy.
Actually, good afternoon, sir, once again. And I'm Govindraj, and I'm pursuing corporate secretaryship. Actually, first of all, thank you, sir, to giving a wonderful opportunity to know about life insurance. Actually, we know something about life insurance, but you give a knowledge about life insurance that we don't know. So actually, it's helpful, sir. And I hope it's a good opportunity to all of us. Thank you, sir.
Thank you, Govind.
Hi, sir. I'm Bonnie.
Bhubaneswari, Soluma.
Yes, sir. First of all, thank you for this opportunity, sir. And your speech is very amazing and very useful and very.
Your line is breaking, Bhubaneswari. Internet connection. So we are disconnected from Bhubaneswari.
Sir, கேக்குதாங்க sir?
Now you can hear, ma'am. Tell.
First of all, thank you for this, sir. Your speech is very amazing and very useful.
Thank you.
Once again, thank you, sir.
You're most welcome. Okay, Malar, Malar Kodi, there's no questions around.
Sir, few minutes, can you wait, sir? Any students are offering the questions?
Can.
Just in few minutes. Any other students, can you tell your feedback? Can you have any other questions asked?
Like I will tell the students one suggestion: as you study and as you are going out, you can also look into doing your actuarial science. Lots of students they do actuarial science. It will take about 4 to 5 years, I think. And when you do actuarial science, you can become an actuary for life insurance and general insurance company, because there's lots of opportunity. And in Malaysia, it's compulsory that every single life insurance company must have a minimum of 2 actuaries. Otherwise, they can't operate. And your salaries in like in Malaysia starts as much as about close to 30 to 40,000 a month, Malaysian ringgit. So look into actuarial science as a subject you can study. You can work in lots of places, not only insurance companies, banks, and everywhere, whereby you will formulate the premiums. You will learn how to formulate premiums. That depends upon mortality, that depends upon expense factors, that depends upon interest rates, all that. So it's an amazing subject to take, but in Malaysia, we do not have that many actuaries yet. Even I think most of the countries, they don't have many actuaries. So look into one chapter where you can, after your graduation, you can do actuarial science. That's my humble suggestions to you. Yep. Yes, Pugalendi.
Good morning, sir.
Yes, Dr. Yashoda.
Sir, I had one clarification, sir.
Yeah.
Sir, when we traveling in a NH, if got accident means if there is any claim for life insurance, I
Yeah,
need some clarification, sir. Because somebody tells there is no insurance claimed here, somebody tell it is claimed. So I got clarification. I need clarification, sir.
That means when you travel.
Yes, sir. When I travel, if I met an accident, went with an accident, means if I got claim or not. It is my question.
Yeah. You see, all
Because
life insurance.
People told that it is NH, it is across speed limit, so we didn't get any insurance regarding this. So I need clarification.
Okay, normally an insurance policy covers the element of death, the element of disability, and in your insurance policy, you can incorporate accident as an additional feature. இப்போ ஒரு கார்ல வந்துட்டு we are putting a lot of gadgets inside the car, right? Sometimes we change the rim, sometimes the rear mirror we modify, the front dashboard we modify. That's called accessory. So like too in your life insurance, you have your death claim, you have your disability claim, and you have incorporated accident inside as an additional element. Yes, whenever you travel, you have made an accident, you should be claimed. You'll be paid. And normally, like in India as well as in Malaysia, all your policies are worldwide cover. But you have to be careful only on your medical. Your medical is like in Malaysia, your medical in overseas is covered only for 90 days from the date of arrival. After that, you have to come back and claim. So, and if you met in an accident while traveling, yes, you can claim. I don't understand why you can't claim. Unless
No,
accident,
accident. No, I want just a clarification because somebody tells you got, somebody tells you didn't got, so that I need clarification.
No. Always incorporate accident inside your policy, or option number 2, whenever you travel, you can always call any agent around, insurance company around, not necessarily life insurance companies, general insurance companies. You can take a travel PA, travel personal accident. And the travel accident policy will cover only your period of travel. Say you're going today and you're coming back 1 month later. So they'll be covering you for 1 month. For any accident, they'll pay you, right? Because of an accident, you lose your teeth, they have to pay you. You're admitted to hospital, they pay you because of your travel, right? And then your luggage loss, right? And then all aspects of travel they cover. And the delay in flights, but then the delay in flights, normally they have they have a remark that the flight should be delayed for more than 6 hours. Yeah. And then if your baggage is missing, you can buy clothes to the tune of about $250 or $300 and get it reimbursed because your clothes are gone. So you cannot be naked. So you can buy.
Okay, sir. Thank you, sir.
You're welcome.
Sir,
Yes.
I'm Sangeeta. One more clarify for
Sangeeta,
benefits of,
சொல்லுமா.
so one more clarify for benefits of medical card, sir.
Yeah. Benefits of medical.
Yes, sir.
Sangeeta,
Yes, sir.
Benefit-
Medical card.
yeah. A medical card is given to you at the inception. That means ஆரம்ப காலத்துல. When you buy the card, your health must be in good state. No diabetes, no pressure, no major accidents. You would have a small cut when you're young. That is okay. But the cut is deep and has gone into your tibia and the fibula or your bone. Then it has to be disclosed. Otherwise, your medical card will be given. So the medical card is when you're admitted into a private hospital, because government hospitals do not take medical cards because government hospital is free. But some semi-government hospitals, they do take a medical card. But medical card is applied for more private sector. So your medical card will have an annual limit, how much you can claim for a year. And then it will have a lifetime limit. Throughout your lifetime, how much you can claim. These are two important components you have to look into your medical card. And within the medical card, you must read what are the items it covers. It covers most of the items. That means for an operation, how much it covers, right? These are all generalized. The other part is like cancer, like kidney dialysis, right? It will have separate column. Look into it, how long it covers and how much it covers. So your medical card, your benefits will increase. Very key point, huh? Your medical card, your benefits will increase according to your room and board, R&B. If your room and board is say 3,000 rupees, your medical facilities or medical limits will be according to that. It is 4,000 rupees. It will be according to that. 5,000 rupees. Higher the room and board, higher will be your benefits. So when higher the room and board, of course, your payment will be higher. So it's important that while you are in college, right? If you're thinking that you're going to finish your college at any one time, start working, grab a medical card first. Because sometimes if you look into genetics, right? They call it in genetics, they call it transference of characters. Transfer of characters, if your parents are diabetics, both are diabetic, the chances are you can be a diabetic because you have the access to the XY chromosome, right? In certain generation, you become a career, you don't exhibit your character, but subsequently your child can become succumb to that. So glaucoma, color blindness, diabetes, cancer, all these are found to be heredity. Heredity means it can be transferred from your great grandfather to you also. So allam varathukku munnala get a plan and keep it so much more easier. Sasi Kumar. There's Abhi Kumar and Sasi Kumar.
Yeah.
Sangeeta,
So
you
thank
understood,
you, sir.
Sangeeta? You understood, Sangeeta?
Yes, sir. Thank you, sir.
Welcome.
Dear, any other doubts you have clarified? Ask me one by one fast. Or any other feedback or any other suggestions? Dear faculty, any other suggestion and feedback?
Why did they raise hand there? Sankita raise hand, Darshini's raise hand. Then Nantana Kopala here raise hand.
Okay, sir. So today is very wonderful moments throughout of you. Our students have clarified their doubts later with the insurance about insurance from you. So it's a great, how to say, I don't know, it's a great chance to us and our students and our college faculties. Thank you so much, sir.
Okay.
Next one.
Thank you, sir. Let us
Thank
be
you.
grateful to two people who make us happy. They are two charming godless who make our souls blossoms. With these lines, I would like to invite Ms. S. Deepika, Assistant Professor in Corporate Secretaryship, to thank this gathering. The meeting is adjourned.